Hi, everyone. I'm Valerie Leonard, founder of EverThrive Financial, and I'm happy to share our March version of EverThrive's 5 Things Investors Need to Know video series. First, I mentioned last month that we are cautiously optimistic about what's ahead. And on the economic front, results of fourth quarter 2023 GDP showed that economic growth came in stronger than expected, and projections indicate that first quarter results are on track to exceed expectations as well. Job growth, wage growth, and also spending have all accelerated. And on the stock market front, you can see here that the S&P 500, the mid cap 400, and the small cap 600, as well as the Dow Jones, all posted gains in February. But more importantly, they all posted gains over the 1 year and 3 year timeframes as well. On the flip side of this coin is that higher growth in the economy can generally keep inflation higher too. And so, although there was excitement a few months back about the potential for a Fed rate cut at some point in 2024, it's looking less and less likely at this point. Second of all, as you know, I always advise that people try not to make emotional decisions when they invest. And this is usually advice that I give when markets are down, but sometimes I see people make emotional decisions when markets are up, like they have been recently. And of course, this can be equally as risky. So your risk tolerance gets tested, of course, in volatile markets. And if you're losing sleep when markets dip, it's a sign that it may be time to adjust the amount of investment risk that you're actually taking. But when markets go up, it's still important to invest within that same risk tolerance profile. So, this is something that our team helps our clients with, and I encourage you to keep your risk tolerance in mind before making any drastic changes to your investment strategy. Third, I also want to point out that our government spending is a big driver of GDP. It has grown recently at twice the rate of personal consumption, and it's expected to be 23.1% of the total GDP figure in 2024. So take a look here at this top line that you see on this chart. This top line illustrates what we call mandatory spending. So this is the amount the government must spend essentially to operate. So every year, a larger and larger portion of government spending is mandatory, including the cost of Social Security, Medicare, Medicaid programs, et cetera. So the middle line, though, represents what we call discretionary spending. And this line is actually going down when we see mandatory spending taking a larger chunk of the total overall government spending figures. With government spending, we're going to continue to watch the effects that this has on our economy. But generally, we want to also watch consumer spending because consumer spending is critically important to keep an eye on as well, because as a consumer driven economy, we generally, you and I make the economy tick. And so we want to watch what consumer behavior says, how consumers are feeling, how they're thinking, and what they're doing with their money. Fourth, on that note, it's also very important that investors allocate their investments strategically. Some asset classes or sectors are going to continue to underperform, while others should likely overperform. And this is why it's important to make sure that your portfolio is truly diversified. Now, in my experience over the last 20 years, I find that most investors don't actually understand diversification. It sounds like an easy concept, but they don't generally really know where their money is allocated when they open up the hood and look underneath. So, when evaluating new portfolios, I tend to see people diversify to mediocrity. So, they're over diversified, or they may think they're diversified when they have actually significant overlap and they just don't know it. One strategy I like to use with clients is to strategically overweight investments to areas with the highest potential to outperform in the coming months or in maybe the coming years, and then also underweight areas that may likely underperform. This strategic allocation strategy can help create a more dynamic diversification approach potentially. And last, this is a reminder that regardless of what goes on in the economy or who gets elected president, or even what's happening abroad, staying invested in the market over the long term is a solid strategy for working towards your goals, even when you are nervous. This chart shows that the Dow Jones Industrial Average going all the way back to 1900 up until today, has a very positive trend. Despite its ups and downs, it has continued to climb over time. What's more, this chart from Fidelity Investments tells a story about the correlation between markets and politics. When you analyze how the stock market has performed on average, going all the way back to 1933, under different political environments, there's not a lot of difference in market returns. Politics actually plays less of a role in market performance than Americans think, although you can see here that a divided government tends to produce better overall results. If this information has been helpful to you, don't forget to subscribe to our YouTube channel or look EverThrive Financial Group up on social media. And that's all for this month. Thank you for subscribing to our YouTube channel. Thank you for watching, and we will see you in April.